Is this the end of the Bitcoin bull market, or are we just gearing up for the next move? As you see, many people right now say it's just a dead cat bounce and the bull market is over, and sentiment feels pretty bad overall. In today's video, I want to look with you at the facts that show us where are we actually standing in this market, where is sentiment going, and are the people right? Over 50% of the professional fund managers right now predict a bear market scenario or a big recession, or even worse, a scenario like the 1930s. But on the other hand, charts are showing us something different. And I made a video 2 months ago where I spoke about this scenario that just happened. And let's have a look what I had to say in this video. So, doesn't this look quite similar? I think we need to prove that we can hold this level. If we can't hold this level, I step back from this idea. But so far, it looks pretty much the same. It's going to be about the same correction. It's going to be about the same move. I don't think we're going to move up 20x from here. So this was about 2 months ago. I said we go down to around 75,000, then we bounce from there. And if we can hold this level, everything is the same we had 2017. And I want to remind you, this was before tariffs, this was before the trade war with China, and before all this escalated. To be honest, we had the worst possible outcome, and that was something that nobody expected. But instead of falling and not holding the level, we actually bounced from our first support zone, which was our best case scenario, which happened even though the news were even worse than everything we expected. So this reminds us a bit, is it really that bad out there? This is the topic of today's video, and I want to check with you on a lot of indicators that predict us where we're going and where we are in this cycle, and if this is a good time to buy or if you should just take your money and run. I'm quite sure that you're familiar with this chart. It's the Wall Street cheat sheet, and it shows us the psychology of a market cycle. This is not just for Bitcoin, this is not just for crypto, this is for every single investment market, because it's always the same. Charts are human emotions printed. So the charts show us how human emotions work, and we always do the same mistakes over a long term of time, and that's why actually these charts work so well. So when we take this Wall Street cheat sheet, we can see where are we. Disbelief was the best time to buy. Most people missed it because most people had disbelief and didn't believe that Bitcoin will ever recover. This is the best time to buy, it's long gone. Then we had hope, okay, maybe a recovery is possible. Then the optimism came, we started the rally, and belief came. Time to get fully invested, people were going in, and now we had this correction. And I think that the correction that we see right now is pretty much this area. Because we have the consolidation, we have a bit of sideways movement, and nobody knows really where are we going. But we never really reached euphoria and thrill. And I will show you how we can see that we never reached these levels with the next charts I will show you. Thrill means people go a bit crazy and they start to do stupid things like taking too much leverage at a too late time of the market. And euphoria is usually when retail comes in masses and buys, which hasn't happened yet. So one of the first charts I want to show you is actually one of my favorite indicators, and it's for free. It's the CBBI index, and it shows us different indicators. The first indicator we look at is the P-cycle top indicator. This has been invented to predict the top of Bitcoin within a few days. And as you can see on this chart, it has worked pretty well. When we look at this chart, the P-cycle top indicator, exactly the peak of 2013, both peaks actually, because we had the double peak. Then in 2018, 2017, we had the peak right on top, and the P-cycle top predicted it very well. And 2021, same thing. P-cycle top predicted it exactly on a few days. Right now, we are here. We never went higher than 75. And we've never been in the 90s or close to anything like that. So the P-cycle top indicator says we are not there yet. We haven't peaked yet, and we're not too close. The next metric we're looking at is the MRVZ score. The Z-score shows us a comparison of the market valuation compared to the real valuation. So when we reach a level of 90 or above, it's very likely that we're getting close to the top. On this chart, we have the same picture. We saw it 2018, we saw the peak right here. 2021, we saw the peak right here. It was not so accurate because we spent quite a lot of time up there. And then in 2024, we came close, but we never made it above 100. So this predicts also that we haven't seen the peak yet. Another very important metric that we have is the social risk indicator. And herefore, I recommend you one indicator from Into the Cryptoverse, but you need the premium version to see it. Just our friend Benjamin Cowan just made a video on it. I recommend if you don't follow him, you should, because his content is really valuable. So when we look at the social risk indicator, you can see that the indicator risk metric is in the lower range bounds here. We are really in the lower range bounds here, and we have never left them. Like, we had little peaks up here, but it was nothing significant. We never had anything significant. While you see when we had our last bull market peaks, we always got to the upper risk bands. And the interesting part is that you can see that this level here, it took us until the final move of the market to really get there. And then it goes quick. What we have right now is we had this slower upwards phase that we saw here as well. And the social risk metric is going a little bit up and down. Same thing we see right now. The social risk had some moves up and the market moved a bit up, but not in a steep fashion. But I think that once the altcoins start outperforming, retail is going to come back because they don't care so much about Bitcoin. The retail wants to invest into altcoins. The retail wants to get rich quickly. So they wait for the altcoin market to pump, and usually they come too late and are the exit liquidity of the market participants that have been much earlier. So let's see how the social risk is going to behave. But right now, the social risk says us we are anything but close to the peak. So these three indicators tell us that we are overheated, but we're not in peak territory yet. Of course, it's always possible that macro-based something breaks and the whole market structure breaks. But to be honest, right now, you saw in the beginning, we made this video 2 months ago when we had no idea how the Trevor thing is going to go. And it happened exactly what the charts were telling us. So that's why I always say price over sentiment. Don't listen so much to the noise that is happening out there, but rather focus on the data that you have, make your strategy and stick to it, and check if your plan is still intact. And right now it is. We have never lost the 75,000. When we do that, we're gonna rethink. But as long as we don't do that, there is no need to change the plan, in my opinion. And I know how hard it can be. It's all the noise around. Everybody's freaking out. It's like, oh God, tariffs, what is Trump doing? The news telling us bad stories. You have no idea where everything is going, but if we look just at the facts and at the charts, it helps you to really calm your mind and try to stay away from all this noise, from all these people. I know how hard it is. Right now I'm in Germany and I have much more contact with a lot of people, while when I'm at my house in Spain, I have a lot more quietness and peace, and I can just focus on my own strategies without all the noise from the outside coming in. So these three indicators tell us we're overheated, but we are not in bubble peak territory yet. But to make a good choice in the end, you always have to look at both sides. And there are some charts that tell us a different story. Let's look at them first, and then we can come to our conclusion. And I will give you one in the end that might give you everything you need to look at. The next chart we look at is the 2-year moving average. So this shows us that we are way overheated. And it also says we might have had our top already. But we can't ignore the fact that it looks not so accurate anymore, because when we look at this chart, you can see that in the last cycle peak, we spent some more time up there than the cycle before, while on the first cycle we never reached it, and this cycle we spent even more time up there. So it's very possible that this indicator starts lagging more and more as longer as Bitcoin is printing these price actions. But it is not the only chart, and there's one thing that we spoke about quite a lot before, and that is the bearish divergence. When we look at the Bitcoin US dollar chart, you can see that on the 2-week chart we had tagged our trend line. And that's a bit worrying, because when we tagged this trend line before, it has been our top. You can see it here in 2017 on the top. We tagged this trend line. We had it here, 21 on the first peak, we take the trend line. And right now we take the trend line, but then actually we build a higher high and a lower high on the RSI, which is the same thing that happened last cycle. So that's something that might give us a bit to think, and that could show us that there is a risk in the chart that predicts us that we have maybe seen the top already. What we shouldn't ignore is that when we scale a bit down and go on the monthly chart, you can see that the monthly chart predicted also very well the tops, and right now we've never reached it on both peaks. Basically, we had a double top on the RSI here, where we had a higher high on the charts. Now what's interesting to watch is if we can print a new all-time high, because then the structure is broken and we have room to grow. When we speak about bearish divergence, there's some more to see, because when we look at the S&P 500, we can see that we are building a bearish divergence since 7 years. We spoke about this in my last video. If you haven't watched it, you should check it out. If you watched it, you know that I think we are closer to 1998, which means that our final move up is still to come. When we look at the charts here, you can see that we had a long wick down. This shows us there's a lot of participants that are buying the dip and that don't believe into the scenario that it's all over. Nevertheless, we got rejected from the trend line here, and this shows us weakness. Also, we're getting close to a level where it gets hard for the RSI to prove that he can build strength. Right now, it looks like a bottoming process down here, which is very good. Because if we can make this and come one more time back up to the line and build a higher price on the chart, it would mean that we repeat what we did 1998 and that we still have about 6 to 18 months to go. If we could even break this line and bounce from there, that would be very strong, but I don't really see that, and I don't know where the strength and volume should come from. So before I show you my favorite chart, and maybe the only one you have to look at, let's come to a conclusion. My overall thinking is we have signals that are talking for a bear market. We have signals that are talking for a bull market. Right now, for me, structure is intact, and the bull market views are stronger, especially on the longer time frames. So I'm not too worried, and I keep on with my strategy, waiting and maybe buy altcoins as soon as the signals give me the time to buy so. If you don't know when to buy altcoins, check out my video. I will link it here. And get prepared for maybe what's coming if we get the alt season. And I think we do. To jump right in, there's a chart that you have probably seen if you are longer in crypto. It has been very famous for some time. Now lately, not too much. It's the logarithmic regression trend line, and it shows us, okay, where are we standing? I think it needs to be adjusted a bit to the bottom, but even though if we do, you can see that we have not reached the red zone. We are still quite low in the regression trends. And this predicts us that we still have room to grow up, because you can see before we always had this sharp moves up into the red zone, and right now we are not even close to that. But this is not the chart I wanted to show you. The chart I want to show you is this one. If you go up here, you can see it's a lot of indicators combined. It's the P-cycle top indicator, pure multiple, 2-year moving average, and so on and so forth. All the charts that we just looked at, but combined in one chart. And this picture is very interesting in my opinion, because it shows you very clear when we go into buy zones, when there's a bottoming process, and it has predicted the top over the last cycles as well. So right now here we are just at a level of 73, which shows us that we might have quite some room to grow, because we never reached the above 90 level. If we get above 90 on this chart, that's when I start to get worried that we might have seen the peak, or we might get close. But as long as we are like the 70 zone, I'm not too worried, to be honest. And if you found this video any helpful, please make sure you subscribe. We're close to the 100 subscribers. So I hope with this video we can make it. See you next time. Ciao.